Hey guys, what is going on? This is Mark from Mark Melbourne. In this video, I want to cover Facebook as a stock, whether it's a good time to buy. In its recent drop down from 200 down to its current price at $137, we can see that that's roughly about a 35% drop. And I just want to share with you guys whether I think it makes sense to actually purchase this stock at the moment. So I don't want to just isolate Facebook on its own, as there's a wider market correction at the moment. The FANG stocks, so Facebook, Amazon, Apple, Netflix, and Google, they're all down at least 20%, most of them. And the NASDAQ is down quite a bit too from its all time highs. So looking at Facebook as a whole, I think it's a pretty interesting business model. So you've got the social network, you've got WhatsApp, which was acquired for $19 billion. You've also got you've got Instagram, which was purchased for $1 billion back in 2012, which I think is an absolute steal. With Instagram being such an engagement and it's increasing daily active user base, increasing year on year, Facebook is quite promising in the long term, I believe. Where Facebook actually makes most of its revenue is from its advertising, right? So most of it comes from the business advertising side of Facebook. So even though there are some other areas it makes its revenues through, its apps as well as its mobile applications, and then it's now branching into AR, VR, and Oculus Go, and that sort of areas where it's looking to branch into. Most of its revenue really comes from its advertising on both its Instagram as well as the advertising on Facebook ads and post boosting. So anyway, guys, let's look at the technical analysis. So Facebook, as you can see, at its all-time high is currently sitting at $138, and that represents 30% drop here. I've got the support levels being at it's bounced off the 135 or 130 region here. The next support then would be $115, and should we have a full-blown recession, I'd imagine we would see prices drop as low as 115 or even $78, which is the next support point. Similarly, looking at Apple, you can see that it's currently sitting at $147. Look at this massive drop. So it's gone it's dropped from almost $227, and in the span of less than 2 months, it's currently sitting at $150. So Apple is another one that people are probably looking at and thinking, the first quarter they've decided not to announce their revenues, even though they're making money in wearable technologies and other means. Apple is definitely worried about its sales in China. It's worried about its overall product revenue. But that's where Apple's at currently. I think the next support levels I've got here at $128, I think, and then at $93, this will be an absolute steal. So Amazon similarly at $2,000. In a full blown recession, this could easily go down to $700. So that's it's very similar looking pattern for most of these Nasdaq massive stocks. Netflix, again, from $400 down to its current price at $300. That's a 30% decrease. Next support level around $200, and then Google, quite similar as well. Of these 5 stocks, I definitely would be favoring Google, and then possibly Amazon, Facebook, Apple, and Netflix, and in that order. So Microsoft is one that is actually doing quite well, actually, and the reason for that is I think it's more diverse, and it's proving to be more I guess, more spread out across its gaming. It's got its Xbox applications. It's got its personal platform. It's got its business processes, and then it's got its cloud services like the Azure cloud. So that's put it in good stead, and it's actually overtaken both Amazon and Apple for first place. So that's pretty interesting. That could definitely change as the market cap. They're all sitting around between 600 and 800 billion dollars. So going back to Facebook, Facebook has 1.47 billion active users currently, and so it's got 1.47 billion active users, daily users currently, and that number increases when you look at monthly active users. So anyone who uses Facebook at least once a month, the total users is 2.3 billion users. So obviously there's going to be multiple accounts, and there's going to be some outliers for the whole. But if you think about the total population, being 7 or 8 billion people, then that leaves another 4 billion people that can use it, and then a third of these will be people that will just never or just won't be or have access to internet, and therefore won't have access to Facebook. So I think there was an estimate saying that they currently have 70% of their foreseeable total users that they can attain. So they're close to saturation, but the numbers are showing that there are more and more users. Facebook is definitely, the opportunity is developing countries, and then also the older audience. Instagram, on the other hand, continues to show strength, and it seems to be a more engaging platform as it's a visual platform, and also more popular amongst the younger audience. So it'll be interesting to see where this goes. What do you guys think? Personally, I probably wouldn't be buying Facebook and catching a falling knife. I'd probably be waiting for a wider market recovery, but in the time being, this recent decline is a bit worrying, and I think the US markets have overextended over a long period of time, and we're in the early stages of a bear market. So this prolonged bear market could really be concerning, but also an opportunity for us to start seeing what opportunities and what out of these 5 stocks, which one would we be considering to purchase should we see further declines. So perfect opportunity to look at the fundamentals of these 5 stocks. I think Facebook, with its recent privacy, its inadequate ability to protect its users' privacy has become it's been brought to light through the media, through the abuse or misuse of its massive database. So it's got so much data that can be used in terms of people interacting with mobile applications, people's address book, who their friends are, and this data can be then sold or have partnerships with manufacturers like Samsung, Apple, and the rest of it. And obviously this information can be used to target target the audience or consumers in an unethical way. So it is a little bit concerning, and I think this will negatively impact it. How they handle it is going to be interesting, but we've seen that as a whole we've become more accepting as a society of providing or allowing large organizations to access this kind of data. But there is a line that needs to be drawn. Obviously, if an inch is given and a mile is taken, this can really be stretched out, and it's been seen, leading up to presidential elections where this information can find its way into influencing these kind of big events. So I think Facebook as a whole, the engagement of the social network platform will start to stagnate, but as a whole business model, they've got so much revenue, so little debt, and they're reinvesting a lot of that into cybercrime, a team to look after cybercrime, but they're also falling short in terms of their earnings. And this definitely impacts the share price from a share investor confidence point of view. However, long term, I think this is probably better for its users, and I think this will represent, you know, more growth for Facebook in the long term. I think Facebook isn't going away anytime soon, and it's definitely going to be a force to be reckoned with in the next 5-10 years still. Although, you know, Facebook did supersede MySpace and there is threats of substitutions. However, I think because it's got its photo sharing application Instagram, it's got the Facebook advertising for business, which really targets down demographics. You can use it to target specific audiences like young audiences 18 to 24. You can target a 1 mile radius within certain locations. You can target consumer behavior as well as characteristics, and that makes it quite a powerful tool. So I don't think that's going away anytime soon, and I think it represents a good investment opportunity if you buy it at the right prices for the long term. Hopefully you guys enjoyed this, and that's my analysis of Facebook.